Good morning and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Brand new day and lots of cues to digest. Globally, we've had Wall Street snapping out of a 4-day slide. We also had Nvidia numbers, that seem to have put a lot of concerns over the AI bubble, over a possible AI bubble to rest. Of course, we will get you a global voice on the show to understand what the road ahead looks like, with respect to the AI play, with respect to US markets, whether or not the Nvidia numbers have actually averted a huge market crash. That's a big question that we'll be posing to our global guest this morning. It's an action-packed show. We will also get you a chartist view on the next levels to watch out for on the Nifty. Mind you, we're just about 1% away from all-time highs, clocked that 26,000 mark in fact, we ended above that 26,000 mark for the second time this week. Let's see whether or not we can clock that crucial resistance zone of 26,100 on the upside on the Nifty or not. If that happens, who knows, we could be looking at fresh lifetime highs as early as next week. That's the optimistic view. But let's see what happens. All your stock related queries and all the stocks that are in news will also be in focus. We'll take stock of them as well. But very quickly, before we bring on board our global guest, let me run you through the top stories at this hour. Wall Street ended higher following a 4-day slide led by AI bubble fears. Stocks gained as investors awaited Nvidia earnings. Meanwhile, minutes of the Federal Reserve's October meeting reveal a clear division among policymakers, prompting markets to scale back expectations of near-term easing. AI chipmaker Nvidia reports third-quarter earnings and revenue that topped Wall Street expectations. The company guides for stronger than expected sales in the fourth quarter. Stock, in fact, rallied 4% in extended trading. Asian markets have roared back this morning amid renewed momentum in chip stocks as investors cheer Nvidia's hotter than expected earnings and bullish forecasts. The Nikkei was up in excess of 3% last time I checked. The GIFT Nifty is indicating a positive start for our markets, but in the pre-open session, I can see it's looking fairly muted for our markets. Let's see. We'll discover at 9:15 how we really kick off trade. And lastly, crude prices fall after reports indicate the US is pushing to end the Russia-Ukraine war. Meanwhile, gold prices rise 1% on the back of safe haven demand ahead of key US economic data. The jobs report for September is due later today, so all eyes will be on that, given the fact that it is coming out after a 43-day US government shutdown. So that figure will be keenly awaited. All right, then, let's bring on board our first guest, global voice this morning, Peter Cardillo, Chief Market Economist, Spartan Capital Securities, joining in. Peter, lovely chatting with you. It's been a very, very long time, and thanks a lot for agreeing to join so late. It's 10:30 p.m. out there. But, first of all, what do you make of the Nvidia numbers? They have topped expectations. Data center revenues, earnings have hit all-time high. We've seen US futures also make a comeback. Asian markets are roaring back. Numbers seem to have reignited AI trade. Do these numbers put to rest the fears around the AI bubble, a possible AI bubble that were building? What are your thoughts?
Yeah, well, let me say that the market indicates that, and of course they were strong numbers. They gave strong guidance. So the market seems to think that this is going to put to rest the fears of perhaps an AI bubble, and so we're headed for a strong opening tomorrow. And of course, that doesn't mean that the market will be free of all of its worries. The next hurdle, obviously, is the FOMC meeting in December, and the Fed minutes yesterday revealed that we have a divided Fed, and the minutes were basically a little bit more hawkish than we expected. And so that puts up to grab whether or not we have a rate cut in December. In fact, bets continue to diminish that the Feds will cut by 20. The Feds continue to diminish of regarding a rate cut, but I sort of dispute that because
Hmm.
the problem is that the Fed is in the blind, just like the rest of us, due to the government shutdown. But I believe that once we begin to see the flow um, of the inflation news and the jobs market news, the inflation uh, will not be all that pleasing to the markets. It'll continue to show
Hmm.
sticky inflation. Most of that is due to the tariffs. And,
Hmm.
uh, even President Trump acknowledged that higher inflation is due to tariffs. And he took action, actually, by lowering
Hmm.
high tariffs on the prices of beef, coffee, etc. But
Hmm.
the key here is the labor market. And I think the labor market is much weaker than what market perception is. And so I believe that when it's all said and done, despite the odds against the rate cut that continue to increase, that the Fed is likely to cut by 25 basis points. And I want to touch up on one other point here.
So
Uh,
you mean 25 basis points in December, Peter?
I think so. I think they're going to cut by 25 basis points. I know I'm going against I'm
That's a
going against
contrarian view.
consensus. Yeah, that's a contrarian view, but again, I base it on a weak labor market. And I think we're going to see that when we
Hmm.
begin to get the labor numbers out. And so I believe that the Fed is likely to sacrifice uh, the sticky elevated inflation and focus on the labor market. As I was saying,
Hmm.
I want to touch on another factor here. Today we got the trade deficit for September, and that showed that there was a noticeable shrinking, and that's will probably show up with the revision of the third quarter GDP. So we're probably looking at close to 4% or maybe a little north of 4% in terms of economic activity in the third quarter. But these numbers are really not portraying the health of the consumer. So
Hmm.
um, it's again, a divided economy, you might say. The wealthy are
Hmm.
spending. They're finding it easy to pay their bills as usual, obviously, and the middle class is struggling.
Hmm.
And so I think the Fed realizes that and take that into consideration with the labor market. And I think that that's why the Fed could cut by 25 basis points in December.
Hmm. All right, Fed could cut by 25 basis point. That's Peter's view, going against the consensus. But where do you see India now within the EM basket? Given the fact that we have underperformed, markets like Taiwan, China, etc. over the last year.
Mm.
One was, betting on India emerging as an anti-AI play. But now with Nvidia's numbers, would you expect that, or would you rule that out, or would you say that India could still emerge as a bet on diversification? Because there's only so much that investors could buy into the AI trade. What are your thoughts?
You
And
know,
after the recent spate of earnings, would you say India valuations are, kind of looking okay rather than very expensive?
yeah, I think so. And you said it yourself, India, technology, AI. So with Navita's numbers, perhaps that will, spill over into India. And I think India will catch up to the rest of the markets. Of course, it's been a rough in terms of comparison to Taiwan and the rest of the group. But I don't underestimate the workforce in India, especially when it comes to technology.
Hmm. Okay, one more question then, last one. Three big investors have exited Nvidia just days before its numbers, right? Peter Thiel, got Michael Burry and SoftBank also, selling their stakes in Nvidia. I want to know what is it that they are seeing differently that the street hasn't figured out yet? Because after the numbers and after the commentary from Huang, it seems to put everything to rest. But I'm sure those investors, those marquee investors, saw something differently. What are your thoughts on that
Well,
front?
let me put it to you this way. I don't speak about individual companies or the sectors, if that sectors in general, but the numbers were strong, and it's going to create euphoria. And so, how long will it last? I don't know. But it's good news. It's a relief, let's put it that way. And so I think the markets will act accordingly.
Okay, the markets will act accordingly, and that's obviously visible if you look at what's happening across Asia, and of course we are poised for a good start when it comes to the US markets this evening as well. But with that, Peter, would like to thank you for taking out time and joining in so late. Appreciate your taking out time, and I wish we could have more conversations going forward in the future as well.
Thank you.
Thanks a lot. On that note, let's focus on the domestics then. Of course, at the pre-open rates right now are suggesting that the Nifty would, cruise past that 26,100 mark. We are at 26,132 in the pre-open, and the Sensex is showing up by almost 300 points. So yes, inching closer to those all-time highs of 26,277 on the Nifty. Fingers crossed. Let's hope we have two more trading sessions to go this week itself. Fingers crossed. Let's see if that mark gets crossed this week itself. But taking a look at what really transpired yesterday, we did stage a very smart recovery from intraday lows, and financials and IT were leading from the front, with the IT index gaining in excess of 3%, and the Nifty Bank index, of course, hitting a fresh lifetime high and clocking or closing above that 52,000, 59,200 mark, I beg your pardon. So yes, that happened, but let's see whether or not the momentum will continue. At least the pre-open is suggesting that we will, so fingers are crossed. But let's bring on board our technical analyst then, Chandan Taparia, Senior Vice President, Head Derivatives and Technical Research at Motilal Oswal, joining in. Chandan, lovely chatting with you. Nifty is looking at 26,100 at pre-open. We're just about seconds to go for the markets to open. Do you expect the momentum to continue?
Yeah, good morning. I believe the market has seen a decent buying interest at every small decline in major trend is in tech. So I believe that till it holds above 25,900, 25,950 index has potential to head towards its all-time high of 26,277. Bank Nifty has been outperforming, and I believe till it holds above 58,500, it can head towards 60,000 mark. So both the indices are looking strong and expecting fresh leg of rally in the market going forward.
Okay, expecting fresh leg of rally, and yes, we are continuing that rally. We are above that 26,100 mark on the Nifty, and all the sectors, almost all the sectors are trading in the green. Metals are participating in that, despite the fact that you've had the dollar index crossing that 100 level. Despite that, we are seeing metals emerging as the top sectoral gainers. This morning we had a report as well, on the metal pack. We'll go through that in details in just a bit. But PSU banks continuing their strong traction, up 0.5%. Real estate index is up 0.4%. Energy basket is all upbeat. FMCG, pharma, IT, even banks. I mean, banks although have flattened out, but nevertheless, in fact, now as we speak, the Nifty Bank is flitting between green and red. But 59,200 holds when it comes to the Nifty Bank index. In terms of individual movers, Adani Enterprises, I think it's been in focus, given the fact that it's supposed to be pipping its other contenders when it comes to JP Associates buyout. So this stock is among the top gainers. Tata Motors passenger vehicles has staged a good comeback. The stock, of course, has been on a downward trajectory after numbers, But today up 1%, some buying emerging at lower levels. M&M is among the gainers, and so is Reliance Industries showing strength. It's up 0.7%, 1530. That's where the stock is at. You've had metal names, as I mentioned, metals doing well. So Hindalco among the top gainers. Bajaj Finance, that was a laggard yesterday, managing to do well today. So is Nestle India. You have Hindustan Unilever as well. That's upbeat. What's not doing all that well are the likes of some of the insurers and private sector names feature on the laggards list. HDFC Life is the top laggard. ONGC, ICICI Bank from the banking lot not doing all that well. You also have some of these technology names that saw a very good run yesterday, the likes of HCL Tech under pressure. Bharti Airtel also saw a good run yesterday. Today it's under some bit of selling pressure. Dr. Reddy's Max Health, Max Health did well yesterday. Today it's under pressure. So yes, we are around the 26,100 mark, continuing from where we left yesterday, and yesterday was a very good recovery. But let's go across to Chandan once again and talk to him about the Nifty Bank Index. We clocked in fresh record highs, a record close as well. What are the charts suggesting? 60,000. That's the next milestone when it comes to the Nifty Bank Index. How much time would you wait for that level to come by?
So yes, we are quite positive on the Bank Nifty Index. In fact, the banking and financials are really doing well from last couple of months or couple of weeks. Bank Nifty today open higher. However, it has been consolidating at higher band, but supports are intact, and we have noticed that every small decline is being bought. Today, it made a all-time high of 59,326. But the important part is that base of the market or base of the Bank Nifty is shifting higher. So till it holds above 58, 500 marks, we are looking for 60,000. Buy on decline could be seen. So I believe over the next 1 week, the index has potential to rally to our 6,000 marks, led by buying interest in private bank, mainly Axis Bank, and buying interest in most of the PSU name, including SBI, Can Bank, and all.
Okay, SBI, Can Bank, etc. looking good. But what do you make of the strong comeback that we saw from the IT pack yesterday? Some of the names rallied in excess of 10%. Of course, most of them are from the mid-cap pack, but even the large caps participating. The entire IT index was up in excess of 3%. What do you make of that bounce, and what would you be buying in this bounce?
Yeah, so Nifty IT has given a consolidation breakout on the daily and the weekly chart, and this breakout is happening after the consolidation of last almost 17 weeks. Persistent system is one of our preferred pick, which we are picking from last 3-4 days, and stock has really gave a massive breakout on the last trading session. We believe the positive stance could continue with support of 6,200. It can head to a 6,650 kind of level. Apart from persistent system, SLT could be other IT name where we are positive. Buy on decline with support of 1,600, it can head to a 1,720 kind of level. So persistent will be preferred pick, but I believe a couple of other IT name could be in focus as Nifty IT started to outperform in the market.
Okay, persistent. That seems to be a favorite with a lot of technical experts and even fundamental experts that I have spoken to. But let's talk about metals as well. This pocket is in focus, and metals as a universe itself has been doing well. Even when the Nifty was on a downward trajectory, we saw metals outperforming, and we did see some bit of selling pressure coming in, profit taking in recent times. But today, despite the fact that the dollar index has edged past that 100 level, we are seeing some good traction in metal names. There is a report from HSBC on metals wherein they have initiated coverage with a very constructive stance on the sector. Some of the stocks that they have named are the likes of Hindalco, where they have a buy call, target price is at 980 rupees. Even for Nalco, that this stock is also among favorites when I speak to experts. And here as well, they have a buy call, target price is at 291. For Tata Steel as well, the target price is at 215 and the rating is buy. In terms of Hindalco, now HSBC believes that Novelis setback impact is expected to fade from FY27. Okay, that did prove to be a dampener, the Novelis results, and of course the impact of the fire incident. But the India business did well in the second quarter, and a lot of analysts have reposed their faith in Hindalco, saying that the India operations will offset Novelis weakness. And now, of course, HSBC is saying that this is expected to fade from FY27. So that kind of reinstates some faith in Hindalco. For Tata Steel as well, HSBC is expecting European losses to ease going forward. Hindustan Zinc has a hold rating with 470, target price, and for Coal India as well. I think Coal India has been a weak link. Now here as well, the target price is at 374 with a hold call. However, they have reduced their, they've changed their calls on SAIL and NMDC to reduce due to muted profitability and rising capex. Any of these names find favor with you, Chandan? NMDC, despite the strength in the metal pack, hasn't been able to really fire up. But other names like Nalco, Tata Steel, do they catch your attention? Would you be bullish on Hindalco as well? What are your thoughts on these stocks, and which of them stand out for you?
So I think I'll go with Nelco, National Aluminium. The stock has seen a massive run up in the last week when it rallied well from 228 to 271 marks post its quarterly earning. And now after the consolidative or corrective move of last 4 days, trend seems to be bullish again. So with support of 250, we are looking for a recovery towards 268 to 272. So I think National Aluminium or Nelco could be one pick from the metal counter which can do well in this market scenario. Apart from that, Hindalco, Tata Steel, all these are slightly consolidating or looking for some consolidation breakout to commence the next leg of rally. Tata Steel has major support near 170. With that support, it can see a recovery towards 180. So I'll go with National Aluminium as a preferred pick with the view that it can see the outperformance in the entire metal basket.
Okay, that's the view on metals. So some of these names like Nalco, Tata Steel looking good. But before we move on to queries, I want to get in your thoughts on a Sammaan Capital. A regulatory heat. We saw a 10% cut yesterday. The stock is in F&O ban today as well. It's extending those losses down 4%. The stock has been doing extremely well in the last 2 months. Do you think there's been a trend reversal, and how should one approach this counter now?
So the stock has seen a decent run up in last 2 months, but in last 3 days the momentum got fizzled out. It's down by around 20% on monthly basis. The major trend was negative. The short-term recovery was seen, and now it seems that again it is likely to get stuck. It has gone below its 50-day exponential moving average, so better to avoid now till it remains below 160. It can go down to 145, 142.
Okay, that's the view. Those are the levels to watch out for on a Sammaan Capital stock that has been making headlines for all the wrong reasons in the last 2 days. But let's talk about our viewer queries then. They've started trickling in, and there are quite a few. Let's get them addressed. There are a couple of queries on BSC. One is from Amit Kumar Srivastava, and there's another gentleman, Anvi Shivu, wants to know your thoughts on the stock of BSC. Capital market plays, of course, everybody's bullish on this theme. And BSC, of course, saw a very good rally yesterday as well. What do you do at these levels? Are the risk rewards looking attractive, or should one wait for dips to get into a share like BSC?
Yeah, so Amitji, we are positive on capital market theme, and BSC, MCX are among our top pick. However, these counters have nature to move and then remain consolidative. But yes, if someone is looking for positional point of view, we have target of 3200 to 3400 level. I think a small follow-up could lead the counter towards its all-time high of 3030. Major trend of the counter is positive, and we have noticed that every small decline is being bought. In fact, from last 7 to 8 weeks, the stock has been making higher tops, higher bottom from support of 2035 to now about 2900. So bias could remain positive, and we are expecting it to head towards 3030 to 3250, 3400 for immediate short term and positional point of view. And those who are looking for trading point of view, till it holds about 2800, one can continue to hold the long position. Now, when I talk about MCX, this counter is also doing well. In fact, slow and steady inching upwards till it holds about 9600. It can head towards 10,200 to 10,400 levels.
Okay, that's about BSC and MCX. Hope that answers your query. There's a next query that's come in from Dheeraj Sharma. It's on Happiest Minds. He's holding 13 shares at the rate of 1084. Wants to know whether he should hold or sell at loss. Happiest Minds didn't participate in the rally that we saw in the entire IT basket yesterday. The stock has been fairly sideways, and he's making a loss, a hefty loss at that. What should he do?
So now the stock is not in the trend or momentum. In fact, from last 4 year, it has been falling down, corrected from 1580 to 500 marks. It has been making lower top, lower bottom. So I won't suggest to participate in it. In fact, try to exit whenever you get any chance. Even for the new trader, I'll suggest avoid talking about this. Better to focus on other name like persistent system and all. Looking at the technical setup, 490 is major support, and if it moves above 520, then only the short term bounce could be there. So you need to follow this level as of now. But the structure is weak, better to avoid.
Better to avoid happiest minds. The structure is looking weak. Perhaps look at something like a persistent that has been doing extremely well. Move on to the next query. Then there's a query that has come in on an Electra Green Tech. What should be the target for 3 months? This person is holding it at a rate of 1300, making some bit of a profit here. But the stock as such hasn't been doing all that well in the last month or so. Lost some kind of steam. How would you look at this stock? He's making a profit, so should he hang on?
So actually, it's a good theme, but it has been not performing from last 2 3 months. So I think if someone is looking for positional point of view, can hold, but for short term point of view, it may take time. Major support is around 1300 level. If it moves above 1450, then only the recovery will be there towards 1550, 1600. So good for long term as a theme to play, but momentum is missing as per the technical setup. So immediate momentum would be tough in the counter.
Okay, immediate momentum would be tough when it comes to a Electra Green Tech. There's a query on Aster DM that's coming from Reshmi. Wants to know your thoughts on whether buying into it, or how should one really approach this stock. The stock seems to be consolidating after a good run. In the last 1 year, it has rallied 50% or so, but of late, a month or so hasn't really been doing anything good. So how would you look at this, and what is the strategy here?
So, like major trend of the counter is positive, but from last 3 4 weeks we have seen a corrective move. In fact, 2 days back it rallied to 714, but yesterday it witnessed a decline. So I think let it consolidate. If it manages to hold support of 645, then it can again go to 685 to 705.
Okay, that's the view on Aster DM. Samman Capital, I can see a query on that. We've already addressed it. Perhaps you can go back in the feed and check Chandan's answer on that. We've already spoken about banks, private banks as well. But there is a pointed query on ICICI Bank. So let's just get it addressed. Shweta Naidu wants to know your thoughts. I think she's holding it at 1369 or so. Wants to know whether it's good to hold, or are there any other attractive stocks in the banking space that she could migrate to? Should she stick on to ICICI Bank, or would you look at something else?
So I believe strength and momentum will be there in Axis Bank. First, let me reply on the ICICI Bank. The stock got stuck in a range, has seen a corrective move in last 4 months from 1500 to 1325. Major trend is positive, but immediate trend is getting stuck. So it would be tough to catch the momentum. Immediate basis, 1350 is the support. Recovery can be seen towards 1420, 1430. But I believe Axis Bank could do better. And if someone is looking to get the immediate alpha, can focus on Axis Bank with major support of 1220. It can head towards 1350 to 1400 levels.
Okay, Axis Bank is better poised when it comes to the charts. Hope that answers your query. Let's address a couple of more queries then. Preeti Singh has a query on Hyundai and M&M. She has investments in both. Wants to know what to expect in this quarter from the current levels. Basically, next 1 or 2 months going forward, how would you look at these counters? M&M, of course, very close to 52-week highs, and Hyundai as well has been doing okay ever since the GST rejig came into play. What are your thoughts? Where are these two stocks headed?
So first to talk on M&M, most of the auto counters have done well in this year. In fact, Mahindra and Mahindra is up by around 24%. In fact, in 2025, the auto theme really played well, and this theme is really doing well based on innovation, consumption, GST boost, and requirement of the new SV and the new launches. So I think these are the reason that this sector is likely to do well, and there is the income grows, I believe this theme would be in focus. So I think M&M is one of the strongest counter, but momentum could be slow till it holds above 3600. It can head towards 3850 to 3900. Talking about Hyundai, major trend is positive, but it got stuck in a range. It requires a decisive move about 2450 to commence the rally towards 2700. So buy on decline can be applied. Buy near 2300 with support of 2220 for upside target towards 2500.
Okay, that's about M&M and Hyundai. Hope that answers your query. There's a query coming in on Balkrishna Industries from Alex. Wants to know the long-term support on this counter and wants to know whether it's a good time to accumulate. Balkrishna Industries, I think since July or August, the stock has come down 16 odd percent, and in the last month or so as well, it is pretty much sideways. How would you look at this stock, and if somebody wants to accumulate, is this a good time?
So Balkrishna has seen a corrective move. However, it really rallied well in last 8-10 years from 100 to 3300 level. In this year, is down by around 20%. Multiple supports are visible near 2175, 2200, but at the same time, 24 is a key barrier. Above that, only the price will see the next swing. So it has been consolidating, can accumulate with multiple support near 2250 for a bounce towards 2400 to 2450.
All right, that's the view on Balkrishna. Hope that answers your query. Two more queries to go then. Let's take up this query on Ahluwalia contract, since the stock has been buzzing quite a lot lately. Satya CK, our regular viewer, wants to know what's the long-term view on this stock for adding and exiting. Last 5 sessions, we've seen Ahluwalia clocking quite strong gains. I think 16% or so. Good to buy into it, or wait for dip, and if one wants to exit, what are the levels to look at?
So talking about Ahluwalia, right?
Right.
Yeah, so we have seen a decent run up in last week or in last 3-4 days when counter rallied well from 873 to 1077, but now got stuck in a range. But the good part is narrow range price pattern is visible, and stock has seen a corrective move from its lifetime high. So I believe buy on decline could be seen. Major trend is turning upwards with support of I believe 980. It can hit towards 1060 to 1080.
Okay, that's the view on an Ahluwalia contracts. Hope that answers your query. Last query then, Aisha wants to know your thoughts on Siemens Energy. Wants to know the short-term target. The stock is up today 2%. Any targets that you're working with on a Siemens Energy?
So I think we have positive on the selective name in the energy space. I can focus on other name here. I believe some support based buying could be there.
Okay, that's the view then on Siemens Energy. Hope that answers your query. I think we've covered almost all the queries today. But before I let you go, Chandan, any thoughts on what one should be looking at, in terms of recommendations for the next 2-3 weeks or perhaps even a month?
Yeah, so like we have positive stance on the Nifty until it holds above 25,500 on positional point of view. It can head towards 26,500 to 26,750. Those who are looking for immediate point of view, till it holds about 25,900, we are looking for 26,277 to 26,500. Looking at trading ideas, so many stocks we are getting on radar. Positive on the Hero Moto in auto space. One of the strongest counter has been making higher top, higher bottom. With support of 5,800, it can head towards 6320 to 6,400 level. Positive on the capital market theme. BSE and MCX are our top two preferred idea. BSE one can buy with support of 2850 for an upside target towards 3100 to 3150. Looking for a fresh all-time high in the counter. In fact, 3500 on the positional point of view. MCX is also one of the strongest name with support of 9650, 9700. It can head towards 10,200 to 10,500. Nalco is positive on the metal name and one of the strongest counter. So I believe with support of 254, it can head towards 270 marks. So I've selected one from the metal, two from the capital market, and one from the auto space. And if you want one more name, that could be Axis Bank from the private bank, which can go higher to 1330 with support of 1240. So I think these are the couple of idea which are likely to perform, or one can build all these stocks to initiate one basket as well.
All right, quite a few recommendations and across sectors from Chandan. But Chandan, another stock in news is NBCC. The stock has bagged almost a 3,000 crore rupee order from the Nagpur Metropolitan Authority to develop Navi Nagpur. The stock has been on an upward trajectory. I think the highs on this stock, the 52-week high is 130.70. And the stock is around that 115 mark. Should one, look at this stock with that 130 mark as a target level, or even beyond that? What are your thoughts on NBCC? The stock has been doing
Yes.
consistently well.
So stock
here
has
on, what do
been
you?
consolidating. Yeah, stock has been consolidating, and I believe accumulation is clearly visible on the daily and the weekly chart. As of now, immediate barrier is 119. Above that, it will see the next leg of rally. But yes, bias is positive. I believe one can accumulate with support of 110 for an upside target towards 120, and then move towards 135 to 139.
All right, that's about NBCC. Well, with that, we've come to the end of this segment. Chandan, would like to thank you for taking out time and joining in. As always, it was a pleasure chatting with you, and I look forward to more interactions going forward. Have a great day and great rest of the week.
Thank you so much. You too have a great time.
Thank you. Well, on that note, take a look at the market. We are above that 26,100 mark, barely a percent away from all-time highs. But the Bank Nifty has just about slipped into the negative territory, although it is holding on or clutching on to that 59,200 mark as well. And the good part is that the breadth is also in favor of gainers this morning. Breadth has been a cause of concern. Even yesterday, when the market staged a very good recovery, the breadth was in the negative. But today, that's not a concern as of now. But on that note, a big market voice, Ajay Srivastava, CEO of Dimensions Corporate Finance Services, joining in. Ajay, it's been a very, very long time since I chatted with you, and a lot has transpired. We are just about 1% away from all-time highs. We've had the big GST cuts. We've had a whole lot of data as well in the middle. What are you feeling about the market? Although we are around those all-time highs, the enthusiasm, so to say, is missing. Your take. How are you feeling about the market?
Good morning. No, thank you. I'd love to come back here. I think we can have a good chat. I think it's, the good part of the market, we come back to the high. So people should know that it takes 1 year from a high to another high. And therefore, market has a way of punishing exuberance. And you saw it very clearly in one of the listed stock in the last 48 hours, what has happened there. So I think, markets on a high is a good event because people have to also understand that Nifty keeps changing. It's not the same Nifty. So it's not the same bunch of stocks which are going up. Nifty keeps changing, therefore your index moves in a different way compared to your portfolio. And the reason exuberance is missing is that 75% of shares have not gone up over the last year high at this point of time. Some have been brutally knocked down, some are marginally down, but by and large, the rally has come from a different side of the market. And therefore, the big investment in the mid-cap space and mid-cap investment in the retail space, etc., that's still underwater by a fair degree. And IT, of course, has been a problem child. So I think we should just temper the exuberance with one fact that stock picking is critical. You got to go with the winners. Market will do what its own thing, but it can punish you brutally for being exuberant. This is a time you can let profits off the table, but do not be greedy at this time. This is not a market to be greedy. This is a market to be careful and buy. There's nobody saying not buy. And more important, markets again telling you diversify. It's this whole nonsense of 100% Indian equity and gold is for foggies and silver is for duds is all now washed out at the end of the day. So I think the key here is not about market, it's about have you allocated your portfolio, and that is where your focus should be. That for the next 2 years, 5 years, whatever your horizon is, have you the right mix of investment more than just Indian equity.
So what is the right mix according to you now, Ajay? We've seen, runaway rally in gold, silver, etc. Should one increase their allocation? What should the ideal breakup be as we head into 2026?
See, it depends on everybody's age profile. At the end of the day, it's the age profile issue that how much risk can you take? If you're approaching your retirement, you obviously don't want to take too much of equity risk. If you're a youngster joining in, you can go all gung-ho in, and you've seen what's happened with Robinhood investors, etc., etc. But I think roughly speaking, two things are important. One is you have to invest beyond India. It's a given. We are less than 5% of the market cap, global market cap. So you can't put all your eggs in Indian basket. RBI allows you to invest $250,000 per person abroad. You should use it to the hilt, is my suggestion. Okay. Therefore, is diversify out of India. That is one. And you got several good economies. You got Korea, you got Taiwan. Of course, US is you can't get those companies anywhere in the world. But China, Korea, Taiwan, etc., are doing wonderfully well. Europe is just picking up the bandwagon. So international investment should be about not less than 25% of your portfolio. Metal should be not less than 25% of your portfolio, if you ask me. 50% should go there. 50% should be equity. I know I'm discounting real estate because that's a different beast altogether. But I would say 50% Indian equity, 50% should be diversified away from Indian equity.
Okay, so let's talk about the first 50% that we spoke about Indian markets. Post the Q2 numbers, which are the sectors that one should go, looking for ideas? IT, of course, has not been a favorite with you. We all know that. But I want to ask you about IT in particular. Post the data center pivot from TCS, has your view changed at all? Or do you think that one should not pay even such a price? They are, the valuations are cheap in the IT pack. But would you be against paying that price as well for single-digit growth? Or the TCS data center pivot, has it given you some kind of an indication that there could be more allocation to capital coming in from IT players going forward? What are your thoughts? Has it changed at all?
See, first of all, let's put perspective. IT shares are quoting exactly where they were 4 years back, 3 years or 4 years, depending on which stock you want to pick. Yes, dividend has come in between, so that you can add it to that return, some minor return. But we are at a 4-year flat performance of the IT company. So can you imagine in an inflationary environment we are in, how much money as an investor you have lost if you back the IT? The number two fact is why the views don't change the IT. It's not about the company. It's about the management and the mindset. All the people who work in Indian IT companies have one single mindset. We are a services company and we will do the grunt work and we will do. Not a single person has invested beyond depreciation in the last 5 years. Not a single person. So these are bureaucrats running companies for their own salaries, bonuses, and ESOPs. They're not running for investors. And that's why Indian IT has got left behind. And just a good perspective to give people who are much younger than, I am. Why IT companies succeeded? Because government gave them free land. They had a tax-free income for first 15, 20 years of their life. That's why they built up the corpus and they succeeded by government protection. The moment the government protection disappeared, you see what's happened. They have been left out completely in the cold. And today, nothing changes. You have an Infosys buyback. Here we have Meta, Alphabet, everybody borrowing money to invest in the market. And what does our IT company do? Flagship bearer, great governance. Give you buyback shares? Are you serious, guys? You want me to invest in a company which has nothing to offer to me as a shareholder but buyback? So, perspective is if I have to invest in IT, I got several candidates abroad. I will never invest in Indian IT till this management mindset changes. And if you look at TCS, flagship bearer, what has it done in the last 5 years? Given money to Tata Group to go and invest in companies like Air India, 10,000 crore losses. That's what they have done. They're not invested. Just adding a data center doesn't really change the thing altogether. It's a minuscule part of their operation. But the fact is, these companies have got left behind, and their management, till it is shaken up literally, is not going to change the way they're working. You just see parallel example. I'm going to give it to you for the US pharma companies. Bureaucratic setup sits on gold field, but their performance has been flatlined for the last 5 years. Indian IT, global pharma, leave aside 1 or 2 cases of global pharma, has been absolutely same examples of bureaucrats running the companies for themselves and the buybacks and this dividend. That's all happening. So I would say, recommend, seriously, you want to invest in tech, just go and invest in US companies, invest in Taiwan, invest in China, invest Korea, wherever you can, but not in Indian IT companies. No, not at all.
Okay, that's that's a good way to put it. But let's talk about the AI concerns about AI bubble that had led to a sizable correction, not sizable, but some kind of correction in AI stocks and Wall Street as well globally. But looks like that has been put to rest after Nvidia numbers. Were you concerned about the possibility of an AI bubble, or or were you clearly unscathed by it? What are your thoughts on this entire thing? When you say
one can't argue against.
Look and invest in global IT companies.
One should not ever argue against Michael Burry. That's one example, of course. He's a guru of what can go wrong in the economy. But the fact remains, when you go around corporates of India, you go around corporates of world, what is the one thing which is worrying every board is the impact of AI on the businesses, both on the positive side and the negative side. And whether we like it or not, I think you have to step out of this country to realize the change which is coming. And this change is going to be controlled by the top 7 companies of the world. You cannot repeat it. We can keep saying, I'm going to make LLM models in India and so on and so forth. That game changed long back. If we look at not only AI, look at AI coupled with quantum computing. It's the point is that this world will be very, very different in 3 to 5 years' time. And the good news is that these companies will do tremendously well. Bubble is a relative term to say, okay, I buy today, will I make a profit tomorrow? But if you look at a 3-year perspective or a 4-year perspective, all right, you are good to go. And, you can't argue if you're born today, you got to start earning today. You got to, invest in shares from today. You can't start saying that I should have invested when NVIDIA was $1 trillion. No, it doesn't work this way. These companies will grow. So bubble, I will put to rest saying, use a correction to add. Do not panic. Use a correction to add. This is where the world is going. Therefore, worry not. You keep your ammunition. If you got $100 to put 25. Doesn't matter. Keep your 75 and invest it again. That's one. Number 2, most important, you can also invest via ETF, etc. So balance your, don't have a risk exposure of a stock. Buy tech ETF, they do tremendously well. Buy tech ETF bull. America offers you beautiful leverage products, 3 times the exposure to the stocks. You can use that. If you're a younger person, you can multiply exposure. But tech AI, I think, is a given. And we, in India, unfortunately, I'll be honest to say, we don't even realize what's happening in that part of the world. Change is coming. And the worst part is 70% of India doesn't understand is going to affect them negatively. Our K-shaped economy is going to get further K-shaped as we go forward. And that's implication for investors. Invest where the money is going, not invest in the general value segment of the economy, because that's not performing, that's not going to perform.
Okay, so invest in growth. We may have missed the bus when it comes to AI, taking the lead in AI, but in consumer tech, we've done pretty well. We've got a spate of companies, coming to the market as well. The lens cards of the world grow. We've all seen what has happened there. But what are your thoughts in terms of the kind of valuations they are commanding? Is it good to invest in these names at these prices?
I like what the SEBI chairman said. You can choose to accept it. You can choose to reject it. I somehow, it's again, you can't brush them all with the same, this thing. I found some of the valuation nutcase, I've said before. Some of the valuation may be compelling, but the end of the day is for these companies to perform and deliver over a period of time. It's not everybody is bad. It's not everybody is good. It's a question is that what valuation you want to enter into these companies and make a return. And that is where I said, exuberance just kills you in 48 hours. One of the stock you mentioned just now. Imagine the 2 days back, it was historical high. In 2 days, lost 25% of your share price at the end of the day. So, temper your exuberance, because there is a consumer tech is good. And, we are second to none in payment systems around the world. Let me tell you, India is really far ahead on payment systems anywhere, except China, leave it aside. We are really very good at it at this point of time. But the fact is, how do you make money out of it? And that is where the key is. You start balancing exposure. By taking exposure, you can't remain out of it. But balance and wait for a day when markets do correct and you buy at the right price. If you enter wrong, there is no way you can make money in the world. The best genius cannot make money in the world. You got to enter right. And people who say market timing is not possible and so on and so forth, I would say only one thing to them, that how do you make a return when you buy at 52 weeks high in most stocks? If a market index is 52 weeks high in a year, you count today at the end of the day, 1 year down the line, you're still where you are at the end of the day. So sometimes I don't think timing is all important. You can do it, but sometimes you stay away from exuberance in the market and you get a better entry price. You saw what happened to silver just now. At Diwali, the exuberance was immense. People are buying ETF. Again, you said nutcase valuation. How can you buy an ETF which is 25% over intrinsic value of the asset it holds? Come on, just sense something. There is so much of loose money waiting to be lost in this country. Is amazing. So we all talk of, rational decision making. Oh, we will analyze this. No, we are sentimental fools willing to part with our money. Who bought that ETF at 30% over intrinsic value Just ask his intelligence, check it out. From which rationality did he do analysis to buy at 30% over intrinsic value? And you can come to conclusion there's enough foolish money in the market. So, markets can do what they do, but you got to be sensible with your hard-earned money.
Okay, so where should one really go about looking for these opportunities which are looking sensible at this juncture and which offer, a lot more upside here on? After, in 1 year, have you been able to spot any such, places where one can park their money now?
See, it's like this, sensible spaces is a very relative phenomenon. I promise you that much. Okay, nothing looks sensible if you look at the price because everything is elevated. So there's nothing called sensible in this market. I think in this market, you have to choose your portfolio carefully. And I keep saying India's story runs around a couple of themes. Thanks to GST cut, auto has become a good theme, and we are very good at it as a country. Whether it's auto ancillaries, they may take its own time to pick up, but we are pretty good at it at this point of time. You have the healthcare segment, which is I really go for the hospital more than the pharma companies because there, it's not easy to build a hospital. It takes you 7 years, 10 years to build a hospital in this country. And government expenditure on healthcare is going down as a percentage of GDP. So they have a great future. So we have a great phenomenal future. If you look at telecom space, man, they are just sitting on a gold mine of a lifetime. You will never get this kind of, even at today's valuation, telecom is you're talking of 30 years of dividend payments coming out of this company because there is nobody else can come and do this work for us at the end of the day. And we will need telecommunications. So telecom sector, you see the healthcare hospital sector, you see the auto sector, you see some of the very good engineering companies who are doing good job in exports. Yes, tariff can bring it down for a temporary structure, but intrinsically, they're doing a fantastic job. You have a couple of CDMO companies who are doing excellent job in times of doing it. There's some of the new age companies. You spoke about consumer tech. A couple of them are doing a good job. Now, they will not give you a return in the next 2 years because the elevated prices. But you will get opportunities to buy even the best companies in a correction. So consumer tech is a good place to be. And last of all, let's not forget it. We have the gold loan companies. They are sitting and they're performing wonderfully. But the common element among all this is not the industry. I think the common element is the pedigree of promoter. I think you have to index yourself to say, I will buy shares of a company where I trust the promoter. And you see in financial space, the 2-3 biggest companies from South who are running the financial companies and getting the best returns for shareholders are from South. Strong conservative pedigree, but given phenomenal returns. I mean, by law, I can't name the companies, but it's not difficult to guess. So go for the pedigree. Do not go for the sharpshooters. And then when you said IPO valuation, it's not about valuation. It's about, Hindi में कहते हैं नीयत साफ होनी चाहिए promoter की. The problem with couple of promoters who come into the market is नीयत साफ नहीं है. And if नीयत is not साफ, you don't invest in them. So my good friend, more than industry, go for the promoter and you'll see, I'm sorry, I'm from North India. You'll see most of the companies of good pedigree come from South, unfortunately.
Okay, interesting point there, Ajay. Last question. What about premiumization as a theme? Now that, of course, people will be left with more money in their hands, the likes of hotels, OTAs, liquor as well as a theme. Anything that excites you?
Nothing, because hotels are overpriced at this point of time. I think you're riding the cusp of it. The supply is going to hit in the next 36 months. It's going to be huge supply in the market. Everybody, if you know, has announced 5,000 rooms. Basically, every hotel chain has said, I've got 5,000 more rooms coming at the end of the day. So yes, it can normatively grow a little bit. But I think the space will get very crowded in a year's time, and I think everybody is overestimating the local demand at this point of time. And it's not just this thing to know that you can fly up to Sri Lanka, you can fly up to Dubai, you can fly up to Middle East, you can fly to anywhere else and have much cheaper spaces and better quality of holidays in this country. So I think most hotel companies are over investing at this point of time, and I would say the big boom is over. You got to be careful where you're buying at this point of time. So hotel, yeah, premiumization is there. But whether you get return on the capital, and people, what I'm trying to say again and again is our inflation is not 0%. Our inflation is if you go pay a school fees of your child or a college fees or hospital bill, you will understand, and a rental, that inflation, this fictional 0% inflation doesn't exist. It's 8 to 10% in India. So if you make a return less than 8 to 10% on your stocks, you make zero return and you lose money at the end of the day. Therefore, hotels as a chain, I think will do decent returns, but in years' time, just watch it. 1 year will go very well. 365 days from today, you will see the curve going dramatically because the supply coming to the market is just humongous at this point of time. So premiumization, yes, but not in the hotel at this point. The returns in 1 year's time will, I think, collapse to pretty low or maybe even negatives.
Okay. All right, then, before I let you go on the index level, where do you see us heading? We had a, report from Goldman Sachs wherein they are predicting 29,000 on the Nifty next year. Would you expect 2026 to be a year when markets index takes off? Because we have underperformed
I love,
vis-a-vis other markets in the
you
last 1
know,
year.
I love everybody. When the market goes up, we all say index is going to go up. Of course, index is going to go up because index changes. The composition of index is now the highest growing companies. So if Tata Motors did not grow, is going to drop off the index and new growth company comes into place. Index will grow. So indexes has to grow. So I know it may take its own time, whether it grows by 10%, 12%, I do not know the answer. But the answer is the trajectory of index on a longer term has to grow because we change the index, drop out the laggards and bring in the winners. It's like a relay team. Every time a guy drops out, a new guy comes in. So yes, the answer is index will go up. Answer is in 1 year's time, we will be higher than this year. I am 100% sure of it. Not because 75% of companies have done better. I think you will not do better. India's P's, they're sitting on the mutual fund investment or sitting on P's of stock, which is just not going to deliver return. We can keep pumping money. Therefore, index will go up. Whether your portfolio of 75% of shares will go up is the key thing today. And believe me, lots of Indian blue-eyed stocks are ready, including retail stocks, are ready to be down by 50%, I say, in the next 2 years. So some stocks that you see are blue chip today, we haven't analyzed, and I will hold out to say some of them will drop by even 40 to 50%. It's already happened. Let's not say it's not happened. A blue chip retail stock has already dropped 50%. It's going to drop 50 more. Lots of retail stocks running on P of 70, 80 are going to drop much more. So index will go up, but some of these sectors, I think, will do about 30, 40% correction.
All right. So right selection would be key going forward. With that, Ajay, always I always have a lovely time chatting with you and listening to your
Thank you very
perspective.
much.
And I look forward to more conversations as well. So have a good rest of the week and have a great weekend. And hopefully we'll
You
chat
too.
once again sometime soon.
Thank you. It's a privilege. Thank you so much.
Thank you. Well, on that note, good perspective coming in from Ajay Srivastava. But let's take note of what the markets are doing as well. We were holding on to that 26,100 mark, and just slipped a little bit from there. We are off the session highs, 20 odd points higher on the Nifty, but still in the positive territory. And the breadth is also, as of now, in favor of gainers, marginally so, but still. But it's a Nifty Bank Index that has kind of slipped into the red. 59,150 is where it's at. But otherwise, it's turning out to be a good session as of now. Let's hope that the momentum continues. Also, it's the Sensex expiry today, so do expect some bit of volatility. But let's see. We'll of course come back and recap the day's action at 3 p.m. on closing bell with a bunch of experts, and also we'll talk about some stocks that will be in focus in today's session. So don't forget to log in or tune in at that time, 3 p.m. closing bell. But for now, it's a goodbye from us. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates, and we will see you soon. Thank you for watching.